We're going to start. The recorder is started. Good morning, everybody. We start this room off every day with a daily positive thought, and I think in the essence of trading, there's a lot of things that can happen externally in your life that can create negativity, and we need to be positive in this market. And it's funny. I came across this quote by Albert Einstein: "In the middle of difficulty lies opportunity." We all look at the markets or a trade, and while someone says, hey, the market's going down and it's a seasonally strong period of time and it shouldn't happen, well, the funny thing is there lies the opportunity, because at times that you are in a seasonally strong period of time, guess what? The difficulty, if the market's not adhering to that, you need to look at a different time frame and then uncover the fact that, and I'm in regards specifically with the Japanese yen the other day, where the Japanese yen had a tremendous rally and it had a one-day pullback. So with that said, we need to take a look at the opportunity that if it's a pullback in a strong trend, or if it's not the fact that the market's crashing, it's an opportunity. So you have to look at everything as an opportunity, and that's what keeps your attitude positive. And as long as you adhere to rules, as long as you don't go off the reservation, so to speak, and start getting trading by the hip and emotionally trading, if you trade by and wait for proper setups, and I know a lot of people think that traders should be in and out all the time. The key is to wait for the right setup. You get paid to wait, and you get paid to wait while you're actually in a trade. So there's two things. You wait for the setup, and you wait for the trade to mature. So with that said, I think in the middle of difficulty does lie opportunity. Thank you, Albert Einstein, for that quote to start our week off. This morning and today is very light in the essence of both reports as well as earnings. And I think the big thing will be Janet Yellen this week, and everyone will have their eyes and ears to her. Looking at ahead, we had several names, so many I did take the time to list them. You can copy paste them. Daily buys, PPS buy signal in a weekly buy mode. So you have two different time frames, and these are the names of the stocks that generated a person's pivot study. That's the green arrow. That's the buy signal, or the orange arrow is a sell signal. We call them PPS. It's on TOS as PPS, which stands for person's pivot study. We had several names right out of the box that popped up, and so for those self-directed traders, I thought we would just filter that out for you. Only one name generated a sell signal at monthly resistance. Now, weekly high close doji. So I thought this would be a nice addition for us, rather than for those who already have my Genesis scans. For those that don't, what I would like to do from a planning and scanning standpoint is just say, listen, we have so much to talk about, and every week I try to cover a ton of information. So what I felt would be more efficient for this room is to post my research and my work, and for planning and scanning purposes, we all can see that in the announcement section. So for those members that are here, you have that announcement right there, and you can see all these names here for the weekly high close doji. So one of which we are going to be looking at a trade at the Bottom Line newsletter is soybean oil. I'll share that with you in just a minute. But taking a look at all these names, there's some of that list that I want to set up for today and this week that I think might be prudent, and we'll give out our targets of entry and risk, and then it's up to us to follow up with those to look to see if we are going to trail our stops, et cetera, et cetera. Now, some names are actually, I have more optionable trades, and one is going to pop up as you see here momentarily. I think from a seasonal perspective, I've mentioned it many, many times before, probably the worst company to buy based on holiday sales, but a great company for a longer term trade with a good business model as people start to use online retailing. And the name of the company is eBay. And let me substantiate my statement by saying many people probably would not go to eBay unless it's a rare item, a hard-to-find item, or something that they know, but typically no one's going to go buy their loved ones a used gift on eBay for Christmas or the holidays. But this is a seasonal trend that eBay has, that it starts to enter into a strong time period right about now. And so we'll talk about eBay. I think for longer-term traders that don't want to tie up a lot of capital, this would be a great stock replacement strategy. And if you've studied your options courses, then you know what to look for as far as a delta or the right strike price. Go back and get your options trading courses out. We'll talk about it in our live trading room today, but for those that are watching this video, go watch and go look at what you would want to be looking for as a strike for the next 90 days. And that's the window of opportunity I think you have for at least a good 10 to 15% move coming in eBay in that window. All right, moving forward, we also wanted to list weekly low-close dojis. We had a few of them in here, which what we want to do is cross-reference the weekly high-close dojis to the weekly low-close doji with the seasonally weak and seasonally strong sectors. So seasonally weak sectors, we have I have listed these names: high tech, telecom, XTC, gold. Gold's not adhering to its seasonally weak period of time as of yet. We'll cover that today a little bit. We have high tech, which is represented by MSH index, healthcare, XLV, or the IHF index, ETF, 30-year bonds, TLT, aerospace and defense is the ITA, transportation, IYT, and these, the period of seasonal weakness is between this week and the end of next week. I gave us a 2-week window, and I'm going to do that every 2 weeks by kind of like bi-weekly, bi-monthly. When I see a change, I will incorporate that. So it's important to understand that these stocks are in a seasonally weak period of time, that you have an idea that I guess you could say it's covered through the rest of this month at the very least. So through the first the last week of February. So seasonally weak, seasonally strong. That criteria that I've listed here in the announcement is through the rest of February. So that I might as well just say it like that, I guess, because it is for the next 2 weeks, which is virtually the end of February. So we also have feeder cattle, which remains a little weak, sugar, which remains weak, British pound, the yen, wheat, and lean hogs. Seasonally strong sector, we have energy, the XLE, also could be represented by the oil and gas sector, XOP, or the IEO, housing, ITB, materials, IYM, and XLB are in seasonally strong periods. Nat gas, even though nat gas has had a tremendous pullback, it had a tremendous stretch of short covering, but that doesn't mean we look for pullbacks or significant undersold levels to look at UNG going forward. Home builders in the XHB. Now that's not the home builders like Toll and Pulte and the actual companies that build homes. This is the peripheral home builder sector. Peripheral meaning stores that benefit from someone buying a house. So for example, paint companies like Sherwin-Williams or Williams-Sonoma, or for example, Bed Bath & Beyond, as I claim man's most hated store. It's man's most hated store because it's usually a Saturday afternoon when a man wants to sit around and do something for himself, and the wife says, honey, we need to go do something. So it's a honeydew place, and typically the wife wants to grab the husband and go shop for towels or curtains and have fun on a Saturday afternoon, which is not our idea of fun, or mine at least. So anyway, agricultural sector, DBA. This is a seasonal strong period of time for the ag sector. It's hard to imagine when people in Chicago are faced with 0-degree weather that, believe it or not, warm temperatures are around the corner, and that we are going to see farmers and we are going to see people start to prepare for the ag season. And so we see sales in anticipation of this event. We start to see sales of fertilizer, maybe equipment, maybe this is now the time that farmers are going to start to look for part replacements for their tractors and get everything in order for the farm season, or the planting season, may I say. Agricultural DBA is, there's many stocks within that sector. Coffee, cocoa, even the euro, we've talked about the euro even last week. We said this is a time that euro typically goes up. Now, it's not burning the sky with any major advances in the euro, but it's not declining like some people may have thought. And so with the euro, we put out some really good points of interest in the euro last week, and the euro has not seen a decline. Now, it's not seeing aggressive moves to the upside yet as well. We have, from a standpoint of a commitment of traders report, we have the small speculator is still short that market with the hedge funds and the commercials long. So the only ones short the market are the retail traders. Generally not a good equation for a market to go down. Soybeans typically go up. Bean oil right now is in a seasonally strong period of time, as is corn. So there are areas for you guys to focus in on for the week, and I think this is a great way what planning and scanning should be included as we move forward for every week to expect this type of outline and material. All right, so with that said, we are going to go into our traditional over the condition changes of the stock market. And as you can see, every stock market, the S&Ps on Friday generated a PPS buy signal. We did announce that we had a daily high close doji on Thursday. Even Thursday, while the trade was moving, we announced that we had, if we had closed over that high, that it would be generating that high close doji. Friday's advance was a little over accelerated, and we posted out that if there was going to be a failure or a sell signal, it should break some last conditional change candle levels, and none of those levels were violated. So as we see overnight, we got those little breakdowns. The market condition in looking at the advanced decline, we did see a nice break over these highs. As you see here, corresponding highs in price didn't get taken out, but we did with the amount of participation as well as volume. So it tells me that this rally is a little bit more sustainable unless, repeat, unless we get a complete equal and yet opposite effect today. The next day would be a two-bar reversal. So today, if we negated Friday's gain, then we're back on to figuring out what this market's personality really wants to do. But as far as the strength in the market, except for the Russell, the small cap, it was the weakest sector by terms of performance as well as breadth analysis. So the Russell is the laggard of the move. As you can see, it didn't take out its level highs that we're talking about from like the last few days of January, like we did with the NASDAQ, like we did almost with the S&Ps. And as you see, even the Dow over here had a time period. This is the Dow over here to the far right. The Dow had as well the advanced decline. Of course, there's only 30 stocks there. It did take out its highs, but price did not. The NYSE, same thing. It took out its highs. And with the NYSE, it was kind of like the one market that gave us, that was the strongest sector over the last few weeks, because as price made a newer low, from the December low, the advanced decline did not. So we did announce that to the room. It was one of the reasons why we weren't ultimately bearish in the hole down here. We were near some confluence of very important support levels, and I think that was pretty good for some of you last week. Hopefully you benefited from that information. In the meantime, looking at ahead for the week, we almost, if you take a look on a weekly chart, 2 weeks ago, at the end of January, we formed a high close doji. Last week, we formed on a weekly chart a hammer. The NASDAQ forms a weekly buy signal, and no other market did a similar type of, we did form hammers here in all the markets, but we didn't form a buy signal for the week. So for the week, the NASDAQ, interestingly enough, is the one that is probably going to remain the strongest. It didn't see as deep a correction. Therefore, it really is the one sector that probably, even though it'll remain strong, I'm not looking for it. It didn't fall, so I'm not looking for a huge advance. Let me leave it at that. It didn't fall as much. I'm not looking for a bigger advance. Even though it generated a weekly buy signal, to me, it spells that it's going to be neutral to bullish. So I'm not. I think that the outperformer sector for the week is still going to be S&Ps, because we have so many sectors that are going to weigh in on the NASDAQ, meaning look at the seasonally weak sector. Telecom, high tech, those are the areas that are going to probably keep this index from moving aggressively higher. So with energy, the energy sector, specifically refiners, this is the sector we would focus on. So maybe your Occidentals, your Chevrons, your Exxons, in that space. The energy sector as well as the material sector are going to, and the housing sector is going to weigh on the S&P. So that would be an area of stocks to kind of focus in on for this week. All right. Now let's go over to our and say, what do I expect for support and resistance for this week? For today, well, actually, that is something I'm going to change over here to our multiple page. Actually, I'll do that next. Excuse me. I'm sorry. I did it. I'm going out of sequence. So let me stick with the overall markets and look at relative strength in the sectors, since we're talking about the sectors, and then we'll talk about our stock picks with specific points of entry. All right, so when we take a look at a performance chart, keep in mind this is the beginning of the year. So this is a relative strength performance chart. As you can see from the beginning of the year, and I've got it lined up here since January 2nd, we have this strawberry color, which is utilities. Utilities is still leading the pack as the strongest sector. Last year it was the weakest, the underperforming. This year it's the strongest. Now it's funny because the XLV is the strongest sector next to utilities, but we start to enter a seasonally weak period of time for the XLV. So we're going to want to watch our relative strength performance chart over the course of the next few days. And I think for the sectors that we're looking for strength is energy. So if you take a look up here with me real quick, it's kind of like this maroon color. And here's the maroon color right in here. And I want to change this time frame as I go back so that you can see kind of like how the sectors are starting to come alive and come back off their lows. So here we are, February 10th, and so since the end of January, okay, so since the last day of January, we're starting to see a change in consumer discretionary is starting to lead the pack. So since, if you look at this, since February 5th, every sector is going up, but the one that is considerably the strongest sector by far that has recovered the most is consumer discretionary. That's the XLY. Next is XLB, materials. And we just pointed out that the seasonally strong sector is as you can see this time of year, is in materials. So either XLB or IYM. So material stocks, housing stocks, and you can take a look here, technology, it is leading the way, and that would make sense, wouldn't it? Because we look at the technology as measured by the NASDAQ 100, and that index generated a weekly PPS signal. So it shows that they are buying technology, but I think from here going forward for the next few weeks, it's some of the sectors that we want to kind of focus in on that may start to catch up. And one is this XLE, it's that maroon line. And maroon is starting to, as you can see, if you focus in on this maroon line right here, it is starting to kind of kick into gear. So I think that we have, from a standpoint of looking at what sectors are recovering, we see the transportation, which is the IYT. Now, we talked about seasonally weak sectors, and IYT is a seasonally weak sector. It's in red. So it's still negative on the year. So if you're going to look at stocks and you're going to say, hey, I want confirmation that there really is an improvement from a zero line percentage point of view, and that's what this black line represents, you can see that we are recovering. These are the strongest sectors. These are the leaders of the market, and these are the leaders excluding the technology, XLF. But this is a sector that we want to probably focus in on. And within the energy sector, again, XLE, And you want to take a look and focus on pullbacks this week on XLB, which is right there. And as far as consumer discretionary stocks, kind of funny, there is a name that popped up on my radar as I talked about. It was eBay in that kind of space. So I think we also make mention that we've said many weeks ago in past planning and scanning sessions that we look at department stores and retailers at the end of January, on or about the 25th of January going into the first week of February, we see retailers start to exhibit strength. Many people think it's because of the holidays, but you got to realize that you now start to go into a different season, so people are starting to shop ahead for change of clothes. You start to look into the department store has a second wind, so to speak, and they start to appreciate or bottom out in the retail space. So while it was the one sector that consumers were written off, if you remember, everyone got negative on retailers, everyone got negative on consumer spending for the holidays. Consumers are still there. They have money. It's just from a seasonal perspective, certain stocks do well certain times of the year, and you're going to start to see improvements in some of those names as well. So consumer discretionary, we have to look at certain subsectors, and I have a few names for us to look at there. So from a relative strength perspective, we're just using a different style of analysis to confirm our seasonal, to see, are these guys buying into the seasonal strength story? And the relative strength analysis confirms, while yes, this is where money flows are going. Now, we also pointed out a week ago that while the market was near oversold territories, as the McClellan oscillator had indicated, and I think that was a different form of market analysis many of you are probably not familiar with. So once again, that's why we were not getting bearish in the hole last week. We are getting to a level that I think we're going to see a pause in the market, but by any stretch of the imaginations, we're not overbought quite yet. We have a relative strength. We can see that the turn, looking at the NASDAQ, it did not make an aggressive higher high, but as you can see, the S&P's caught up a little bit more to the upside, and I think this chart tells it all, that the NASDAQ, while I feel it is in a weekly buy, will have less of an aggressive move this week in relationship to the S&P 500. So I want to, if you see, this chart is a spread between the SPUs and the Qs, which is the S&Ps versus the NASDAQ 100. And I think our analysis and research is sharing with you that we want to kind of focus in on more S&P related stocks. Okay, so that concludes our relative strength, what sectors to look at, as well as what index, and to go from a kind of a different aspect of analysis to confirm our original research. So with that said, let's go over to our charts here. All right, so this is a chart of a company called Ross Stores. Ross Stores did form a potential high close doji on the week, long hammer. From a seasonal aspect, we see that we do see recoveries and going forward. In fact, as you can see here from February, as you can see right here, looking back in history, okay, it has a nice seasonal trend that lasts going into actually the middle of June for its annual high. But it doesn't bottom out before Christmas. It actually bottoms out at the end of December to about the first week of January 27th, and then you see a rise. So Ross Stores, is a contender. Just to look at our analysis, it had a big breakout on Thursday, not Friday. Thursday was the breakout. And if we do see pullbacks, I think pullbacks into this level down in here, the midpoint of this breakout over the next couple days, that level is 67.80 or so. And if you look at Ross Stores, it's a $70 stock. It's probably not a high flyer that anyone wants to look at, but you would want to put your stops underneath that corresponding low. That would be Ross Stores. So we have a Ross Store alert for those that are interested in retail. And the reason we picked that is because it is a sector that's in seasonally strong period of time, and it has a nice high close doji for the week. It did pop up with a little bit of volume. It has a little bit of attitude going here. The weekly volume actually looks a lot better. If you notice the weekly recovery here on the unbalanced volume, notice that we took out that prior high, which was from January 10th. Volume precedes price is the theory. So if January 10th, the week ending January 10th, the price was at 74.61, we're $5 cheaper, but we had better volume on this price recovery from 65 to 69. So if it gets back down into this value area, it will most likely be defended based on that volume action that we saw here. So Ross Store is one that has a decent makeup. We could set some alerts for you guys, and then it is one that I think for you retail traders in the room, if you're not interested in tying up capital, this is not a stock that's probably going to see a double by any stretch of the imagination. A double means go from 70 to double in value to 140. It's not going to do that, but it does have a shot of at least making a 15% move to the upside, and I think the risk-reward ratio is pretty decent. Looking at the rest of the stocks in that sector, you'll notice that the whole, a lot of these names all came to life. This is Nordstrom's, the same type of scenario there. From a seasonal aspect, look at the date that you start to see the thing bottom out and really start to accelerate. It's right in here, and it makes the same type of pattern. So it has probably less, it's a less expensive stock. It's a $58 stock. I would say this thing did not have as good of a weekly volume move as Ross Stores. But I just wanted to show you what did all that, if more than one stock in one sector all started to move at the same time, that shows that institutions are behind buying that, and that supports our theory that the retail space, at least in department stores from a consumer discretionary sector, that's the subsector to be focusing in on. Look at Kohl's. Kohl's had an amazing volume for the week. Look at that weekly volume. Now, it didn't really see, it's in a kind of a trading range here, and that again is another $51 stock, but it did have the similar type of move. And then we have another, this is a lower end stock. This is called Stage Store, parent company to Bell's department store. And as you can see, not only did this not participate in a rally whatsoever, in fact, there's liquidation. So this is a stock I wouldn't even want to be looking at from a relative strength, volume analysis, any type of analysis. I would steer clear until the technicals improve. What about JCPenney? I said that JCPenney is a stock that, unless they file for bankruptcy, we see a seasonal tendency for this stock on the end of January, around the 25th. It too has that personality or that seasonal tendency to move up. Now, since we've been talking about this, we haven't gotten any type of a buy signal yet, and as you can see, we are near a quarterly projected pivot support. So I would be waiting for JCPenney's, believe it or not, because of that strong seasonality, because of the fact that if they can get a little bit of volume or at least some type of a trigger to go long, then I'll be looking at this stock, because I believe that by April, May time period, you have at least a shot. This is a stock that might have I would go 40% chance. I'll go that high. It's got almost a 50-50 chance of going to a double, which means from 5.5 to, I don't know about 11, but maybe $10. It does have a shot of getting back up in here into the top end of the range where they started to sell this thing down. So at the very least, it has an opportunity to fill that gap right in here. And on a daily chart, there's multiple gaps in this this market. All right, well, we just hit the opening bell, and I haven't even gone through some of the names that we will go through, but let me leave everyone with this. This is eBay. Again, a retail store. We generated a nice weekly buy. Longer term, if you take a look at this longer term trend kind of channel, all right, it's the interesting aspect is right around in February, as you can see, we start to see the market bottom out from on or about 125. It has a secondary bottom around the 1st of March. So from this time period right here, from our low into going into around May 3rd, that's the seasonally up until the peak of, the end of May. This is a very strong seasonal tendency that you start to look at eBay. It had a very nice move from not only a weekly volume, but boy, look at this daily volume chart. Prices didn't go anywhere. If you exclude this one-day blip here, if you just took this off your chart, if I just put a box over that right there and you didn't see it, I'll tell you what, if you get a breakout in this market, there's a good chance that this stock has got another at least a 10% move. It's been in a long-term trading range. From a perspective, it's bored the dickens out of everybody. This is the move I would expect from the distance. I think that this stock has a lot of upside potential, and it has a lot of upside potential not based on the seasonals, but also that volume analysis. It's a total different makeup. So eBay has an area that I would be looking to buy eBay, but I want to buy eBay on pullbacks, and I would look to buy eBay on a, I think we have to see more of a significant pullback than 54.04, and the levels that I would be looking for, you know, are down here around the 53.50, 53.35. I don't know if it's capable of getting down there, but as you can see, we have a shot at having more weakness for the next 10, 15 days of trading, maybe. So one of the things that you can look at is a June. You can start looking at options that will carry you through that peak seasonal trend, which lasts at the end of May. So what does that mean? If it has a peak seasonal trend that lasts at the end of May, then a May option is not your, you know, tying up equity for that. You probably want to go if they have something a little bit further out, like a June, and you want to go with a stock replacement strategy on that one. Other than that, I'd say look for a pullback near 53, you know, 40 area, 53.40 to 53.60, somewhere in that zone, you know, and I wouldn't want to see this thing get back underneath the weekly lows. I wouldn't want to see it get underneath these weekly lows, which is at least under that low, which is at the 51.10. So I think if you want to go a little bit out of harm's way, you put your stop underneath 49.50. So you'd be risking about a $4 trade, and your potential is, you know, if you think about what 58 represents, think of this stock as if even if you're looking at a 1-to-1 ratio, is it possible to see eBay get back up to 58? And of course, we had a high here of April 2013 of 58. So there, at the very least, you know, is a reasonable expectation of a 1-to-1 risk-reward ratio on eBay. But I just wanted to point that up to you. Other stocks that we have, looking at one last chart, because I know we've gone over here, but in the energy space is a lower priced company. It's called Neighbors Industry. Neighbors Industry is not one that's a high flyer, and you know, you may want to. We have other names that we'll discuss in the room, but here's NBR, Neighbors Industry. It had a nice little move to the upside last week. As you can see, it started off with a high closed doji way back here at the end of December. It hasn't really gone anywhere, but boy, we did see a nice little pop in volume, and on the weekly charts and even on the daily charts has a nice volume trend. So pullbacks here, I'd be looking for a pullback closer to, you know, between I don't think if the market's truly bullish, it shouldn't get to last week's low, but somewhere between 1680 and 1710, somewhere in that zone for Neighbors Industry, and I would want to risk below my, and this might be a little too much risk for a stock trader, but 1609 on a stop. So anyway, there's a couple ideas for this week and in this week's planning and scanning, and I have these things down that I'm looking at. And as the last and not least, and I know that planning and scanning is something that we try to really condense in a short period of time, a lot of information to keep you guys on the right track of the market. Gold. I wanted to start to talk about gold because as we mentioned, is in a seasonally weak period of time. And we've said that if this market breaks down below this last conditional change, then we've got an issue. As you can tell, we've not broken out. We generated a daily buy signal, And we said, listen, if this market maybe gets and closes not over that last conditional change, but above that daily high, then we'd have, you know, a shot up to $1,300. And that looks like what we are seeing in the market. So the analysis still remains the same. But from now, I think what we'll do based on today's close is we're going to change the breakdown. If the market fails from this shelf of support from the last, say, this from Friday, Thursday, and Wednesday's range, it was also the PPS buy signal. If you break underneath that, that's 1250. That's a different story. So we'll be putting and posting our new support and resistance for gold for the day in the S&Ps for day trading. All right. Day trading, as I said in last night's video, I think the market needs, we got a lot of support around 82, 84 handle. This is right in this area where the market first stalled. Looking at today's daily pivots, I think the market's going to want to digest Friday's range. I don't think today's the day that we see continued upside bullish momentum. I think today's, you know, we probably, odds favor the fact after a major rally like Friday, you get inside or narrow range days. So I think it's safe to say that moves above 1795 to 1798 will be contained, and they already have on the overnight session. But then I think this daily pivot around 1782 corresponds to support right in here. I know that's a wild range, but it's what the analysis suggests. Apart from that, we got to look for, again, watch your buy signals against that 82 to 84 range. Even you can see where the market paused here is a 30-minute chart, against that high in this consolidation of this range right there. Okay. And I'll put this on our day trading and then draw behind the indicators. There we go. So that's the area that I think if the market gets near there, watch your short term for pops back up. The market should be defending that level of support. That concludes today's planning and scanning, and I hope you find the information helpful and gives you insights for the week in stocks and sectors. And we also wanted to take, we already took a look at some of those markets such as gold and then mentioned bean oil. Thank you all very much. Have a great trading week.